Hey everyone, this is Dan with Theta Trend. Today is Thursday, April 7th, 2016. It's about 2:30 p.m. or so Mountain Time. The market's closed a half hour ago. So we're taking a look here at a daily chart of the S&P 500 index, the SPX. The market ended the day here at 2041.91. It was off 24 points or so, or about 1.2%. So this big move that we had up yesterday, the 6th of April, it seems like it was a fake out, or seems like for the time being it failed. And kind of what it looks like when we're going to drop down into the shorter term time frames as well, but kind of what it looks like is that we're turning a little bit sideways in here. We have a lot of these candles that are overlapping and they're going back and forth, and that seems like the market is sort of trying to figure out what it's going to do. It's trying to decide if it has the energy to move higher, or if it doesn't have the energy and it needs to correct a little bit more or pull back. And so for the time being, the action that we're seeing here is relatively sideways. We came down today to the 20-day simple moving average. That's this green line right here. And that was the first time the market's touched that line or seen that level all the way back since here, which was on February 24th. So it's been a long time, and obviously the level of the 20-day moving average has risen considerably since that time. And so down below where we are right now, just to be aware of, we have the 200-day simple moving average, and it's down around 2015 or so. And below that, we have the rising 50-day, which is all the way down here at 1972. But I think in the short term, this 2015-ish area is something to be aware of, and something just to kind of keep in the back of our minds. The trade as it sits right now, the T plus zero line, the break-even points are roughly in the neighborhood of 2100, and on the downside, it's actually a little bit higher than the 1990-ish area. It's maybe a little bit closer to 2000 or so, this blue line. It kind of moves around every day, the T plus zero line, so this is just gives us a rough idea of where our T plus zero line crosses the zero line. So for the time being, we're essentially right in the middle of that, and we'll take a look at that in a little bit as well. So let's drop down in time frames to the 65-minute time frame. And yesterday, what we talked about, and just so we're all aware, today's candles are the last 6 candles here. So from this big red bar all the way down through the bottom here. So 1, 2, 3, 4, 5, 6. This yellow line is the 5-day simple moving average, and this is a 10-day simple moving average. And so yesterday, we had this big pushback up and above, and the market was able to hold this level here around 2055. And that level has been kind of significant. When we were talking about it, we said, well, if the market can hold at this level, it has the potential to push higher. And in order for it to do that, obviously, we need to see it get up and above about that 2075-ish level. And for the time being, what I had said is that we're kind of neutral to bullish. And this morning, what we saw is we saw the market open lower. It sold off pretty considerably throughout the day here. And then it came down and it tested again this level that we've been watching down around 2043. And from there, it initially found a little bit of support in some buyers, and then eventually it failed. And from that failure, it kind of reversed and closed right up and around this 2043 level again today at the close. So I would say the market still seems like it's kind of fighting with this level. And it does seem like it's relatively important. If we look at this, the market came down to test the 2043 level back here, which was on Friday. Then we were down here again on Tuesday. We came right in here to test it. Then on Wednesday morning, we were also down there testing it. And then again today on Thursday morning, we tested it and fell through it. And generally, when we see the market test the same level over and over again like this, sort of on an intraday basis, it's usually likely to fail at some point. Whether or not we have continuation beyond that failure remains to be seen. We would need to see the market really get down and below this, kind of 2025 down to the neighborhood of 2020 or so to really say, okay, it seems like the market's definitely turning over. But for the time being, we do see some signs of weakness. The market closed up here right above the now declining 5-day simple moving average. From there, it found some selling and it pushed lower. If the market fails to get back up and above this level here, around 2066 or so, it definitely has a potential to start turning more sideways and even potentially a little bit lower in the short run. The 200-day simple moving average, just so we're all aware, to keep that in mind, is right around 2015 or so. And so that's right there where the cursor is. So a pullback down to test that level right in here somewhere wouldn't be all that surprising given where the market is and the direction it seems to be trading for the time being. That would also push it down below these recent lows here in the neighborhood of 2020 or so. Let's go ahead and hop over and take a look at the trade as well. So the position as it sits today, yesterday we converted this to a broken wing butterfly, and we did that because it seemed like there was a little bit of too much price risk essentially in the position. We're getting close to expiration, the money wasn't coming into the trade, and so we're just making a defensive adjustment and converting the position. Another alternative would have been just to simply close the trade. But at any rate, we converted it to broken wing butterfly. We're sitting in this 1960, what is it, the 2015, 2020, and 2055 broken wing butterfly. All of the adjustments up to this point are included in these two options here. It's being bought and sold out, and so we've done the math on those, and that's all in the spreadsheet for you as well if you hop over to thetatrend.com and check that out. But as the market closed today here at 2041.91, the delta on the trade is negative 0.35, the gamma is negative 0.12, theta is about $18 a day. The Vega is negative 53.84, and there's an open profit of about $117 or so. So in terms of P&L, we didn't see much of a difference today. I think maybe it even came in a couple of dollars, something like that. We are getting quite close to expiration here. We are down to 22 days to go. And kind of my hope is that we're going to be able to get out of this sometime next week. So if we day step this out to next Thursday or so, gives us a position that looks like that. And we have room to run all the way down to about that 1990-ish area and 2100 on the upside. And those were those gray lines on the daily chart, that we were looking at. So if the market can be inside of these gray lines next Thursday sometime, we do have the potential to take it off and hopefully walk away with some of the money that's sitting out there right now. But we'll just have to see how that plays out. Yesterday, I realized that I neglected to talk about the SPX June 1 trade. So we're going to hop over and take a look at that today. And yesterday, if you followed the spreadsheet, you did see that I added to the position. And so what I had originally was the 1940, 1995, 2040 SPX butterfly. And to that, I added the 1955, 2010, 2055. So it's basically a similar butterfly, just slightly higher up. And so we're in a position right now that looks like this. This trade has a little bit longer to go to expiration. It has 57 days for right now. And with the market here at 2041, the delta is negative 1.9. The gamma is negative 0.05. There's about $10 a day in theta or so. Vega's negative 63, and there's an open profit, it looks like, of about $45 or so. And so we're just hanging out. There's really nothing to do in this position for the time being. On the upside, I'm not really too concerned about the trade as long as we remain below that 2100-ish level or so. And we'd need to trade a little ways into the body of the butterfly before it would make sense maybe to take off one of these flies and roll back into a single and then even potentially roll the whole structure lower. But in order to do that, we'd really need to be trading down into the neighborhood of 1990 to 2000 to think about taking off the upper fly. So it's a little premature to talk about that just yet. And keep in mind, again, that 200-day simple moving average is right about here, 2015 or so. But at any rate, that's all I have for today. It looks like things are kind of turning sideways in here for the time being. I wouldn't be jumping in super short just yet, but it does seem like we're having some overlapping candles and the market's taking a bit of a breather. At the same time, we should be really conscious of this level right here. If the market does get back up and above this kind of 2066-ish level, it definitely has the potential to squeeze up and above that 2075 high. So on the upside, I'll be watching that point, and on the downside, I'm still kind of trying to decide what the market wants to do here down around the 2040, 2043-ish area. So that's all I have for tonight. If you have any questions, feel free to shoot me an email, info@thetatrend.com, and thanks for watching.